So that's really a very quick tour of the trends in global payments. And perhaps one other comment, just before I move on to the next section of SEPA and other regulatory landscape changes. At the recent SIBOS conference, where we also, in fact, launched this report after a further launch in the EFMA conference in Paris earlier in September, one of the key stories that came out of SIBOS was very much the importance that banks generally are placing on their transaction banking services businesses as we emerge out of the crisis. And transaction banking services and payments in particular are being seen as dependable, resilient income streams, even in a low interest environment. So actually the story from the first part that I'd like you to take away of the report, the story of the first part is an optimistic story that says despite challenging global economic conditions, the growth in payments is increasing, and these businesses are seen as core to bank strategies, and at the same time there's lots of innovation and an interesting set of non-traditional competitors. So if we move on to regulation, touching briefly on regulation in Europe, and I can't not mention the Payment Services Directive and also SEPA. PSD has been in place now, or at least more or less in force now in most countries for 12 months or nearly 12 months. There's just 2 countries now, and that's Iceland and Poland, who have yet to complete their transpositions. So we've had a fair amount of time now for the market to adjust to the PSD. I think what's sometimes forgotten is there's a little extra couple of challenges that the PSD will bring, and they both come in 2012. And the first challenge is the fact that in 2012, specifically the 1st of January, the D+3 maximum for execution times reduces to D+1. And I know in a UK context, and this is a broader discussion across the EU also, there is work to do to make sure that the payer's bank can meet its obligation with confidence to get all its payments to all the payees' banks within that timescale. So there is just over 12 months to go, and still a little bit of a challenge to make sure that across Europe we can execute all those transactions within the appropriate timescale. The second challenge, of course, about 2012 for the PSD is it's the review date. So by the end of 2012, the Commission will be starting to do their work to examine the success of the implementation, and as part of that, of course, to start looking at some of the topics and some of the issues that were taken out of scope in the final rounds of the negotiation, and I'm sure all those discussions will be starting again. Turning to SEPA, I won't go through all the statistics about adoption rates. We've heard those already this morning. I also won't mention in detail, but I can't not reference the importance of tomorrow's public hearing, which I'm looking forward to attending, and I know a number of other people in the room will be also attending that very key event. There is no doubt now, and this comes over clearly in this year's World Payments Report, that an end date is required to move the adoption rates from the current fairly gentle adoption for SEPA credit transfers and almost invisible adoption for direct debits to a way that will eventually get us to a full migration scenario. And the regulation clearly is proving a challenge, again, as we've heard extensively this morning, in terms of how do you take an essential requirements approach, which seems to be the one that the Commission is looking to adopt at the moment. How do you make that workable? Because if there is a political consensus, and it's still an if, that essential requirements will need to be the way to go, there are a number of challenges that will need to be overcome in terms of the drafting of some of the key articles, some of the key definitions, and particularly the length of and detailed nature of the essential requirements list, if we are not to end up in a fragmented rather than a harmonized outcome, and in an environment where innovation is to some extent stifled by having a too prescriptive set of essential requirements. So there is room for compromise, There is room for negotiation. I'm sure a way will be found to make this regulation work, but it's a big challenge, and I think tomorrow will mark a key date in terms of testing the temperature of the market, having some of the debates that the Commission has set up, and starting that process that hopefully will see a draft regulation that we can all then comment on by the end of this year or beginning of January. Moving away from SEPA and talking about some of the other regulatory initiatives, the Seoul G20 summit concluded at the weekend and has decided to endorse the previous new environment for capital and liquidity that was set out earlier in 2010. At the same time, they've also taken an additional focus, as was expected, on systemically important institutions, and they're still looking at ways in which those particular institutions may be subject to some additional measures and some additional constraints. But if you look at the payments business, and if you look at the implications for European payments, and in a sense, therefore, linked into our SEPA story, there are really a number of elements of Basel III that are directly relevant. First, if you look at intraday liquidity is a very strong focus, for example, of the FSA now in the UK, directly driven by the Basel agenda. And there's a very, very heightened sense of needing to have additional management information, that liquidity is a scarce resource, and I think there's a general expectation that over time it's a resource that will need to be in some way priced because it's a risk and risks need to be priced appropriately. So I think we're seeing a number of potential changes. That links to a number of discussions around systemic risk and how you link the timing of payments based on perhaps an additional cost for liquidity with when those payments are made during the day. So if you look at the example of the US, I think in the early days when intraday charging for liquidity was introduced, the Fed got a little concerned that payments were happening later and later in the working day. So clearly that's something that we will not want to happen in Europe. So it's finding that right balance between husbanding and managing liquidity on the one hand, but at the same time making sure payments can still be processed in an efficient fashion. And the other Basel III implication that has an indirect relevance for the payments industry is, of course, around its impact on trade, and also the impact in terms of deposits and runoff rates, particularly for FI balances. And that's something where the BAFT-IFSA group has been particularly active in lobbying over the last 12 months. And there's some headway being made in explaining very closely to the regulatory community who is listening about the implications and the importance of the transaction banking industry to global trade, and how making sure that these requirements, particularly around FI deposits and also around some of the runoff rates and the capital requirements for certain off-balance sheet trade instruments, need to be set at an appropriate level if we're not going to have a depressing effect on global trade. And the good news is that there is progress being made on both of those topics. There are, of course, a range of other global regulatory initiatives. They're also covered in the second chapter of the report. And they include, and I mentioned them very briefly earlier, some focus on anti-money laundering, anti-terrorism finance, and indeed know your customer requirements. And there's certainly a renewed interest in strengthening and enhancing the rules and the requirements that institutions will need to deal with. And then very briefly, and this is in fact one of the responses as much as it is a market initiative, and this is a response designed to achieve greater efficiency, and that's really the standardization agenda. And there we're really talking about, and this goes to the heart of the SEPA agenda, it's also interesting in the context of the consultation the ECB is doing currently on Target 2 as well. It's about the potential for progressive adoption of the ISO 20022 standard in Europe and on a global basis. So there's a number of opportunities and a number of initiatives which at the same time as the industry is clearly facing a significant amount of new regulation, there are opportunities as well to promote the efficiency agenda. And I think that's the perfect point to move on to the third part of the presentation and hand over to Bertrand, because the story really at this point is the payments industry is a healthy one. Growth rates are sound. There's probably never been a time when the payments business and the transaction services banking business has had more senior management board attention within banking institutions. But at the same time, the environment in which we're operating is an ever more complex one, and the proportion of our annual budgets which are adopting regulation and market change is taking up has probably never been higher. So in that context, we're seeing some interesting developments as banks look very critically at their payments value chain.